What if I told you that America's trade deficit just hit a record high, even after years of aggressive tariffs? The policy that was supposed to protect U.S. jobs may not be working the way many expected. Here's what the numbers actually reveal. For years, tariffs were sold as a solution to America's growing trade imbalance. But new official data tells a very different story. Despite sweeping tariffs imposed under former President Donald Trump, the U.S. trade deficit has climbed to its highest level ever recorded. According to government data, the gap between what the U.S. buys from the world and what it sells overseas widened by more than 2% compared to last year, reaching nearly $1.2 trillion. That figure directly challenges one of Washington's central economic goals, reducing America's dependence on foreign goods. The administration argued that tariffs, often starting at 10% and higher, would revive U.S. manufacturing, strengthen national security, and push companies to produce more at home. But global trade didn't slow down. It adapted. U.S. imports reached a record $3.4 trillion, driven largely by massive investment in artificial intelligence. American companies rushed to import computer chips, servers, and advanced equipment to fuel AI expansion, even as tariffs remained in place. Exports also hit a new high, but not across the board. Key industries like food products, automobiles, and auto parts saw declines, sectors that were especially vulnerable to shifting trade rules. As a result, export growth failed to keep up with the explosion in imports. Trade with China did fall sharply. The U.S. China trade deficit dropped by nearly 30%, reaching its lowest level in about 2 decades. But that didn't solve the problem. Instead of returning production home, supply chains shifted to other countries, creating record trade gaps with nations like Mexico, Vietnam, and Taiwan. When services such as tourism, finance, and digital products are included, the overall trade deficit remained just over $900 billion, nearly unchanged from the year before. This shows that services help balance the picture, but they're not enough to reverse the trend. Frequent changes to tariff policy created uncertainty for businesses and investors. Tariffs were also used as leverage in global negotiations, including threats against countries trading with Iran. At the same time, legal challenges are moving through the Supreme Court, raising questions about whether some tariffs could be overturned. Multiple economic studies suggest the cost of tariffs is often passed on to U.S. companies and consumers, through higher prices and supply disruptions. In other words, the burden doesn't stay overseas. Economists warn that the full impact of trade policy changes takes time. Many companies began shifting away from China long before tariffs officially kicked in, and replacing suppliers has proven costly and complex. The result? Imports stayed strong, despite higher trade barriers. The message from the data is clear. Tariffs have reshaped global trade routes, increased uncertainty, and raised costs, but they have not yet delivered a major reduction in America's trade deficit. As the U.S. economy evolves, the debate over tariffs and global trade is far from over. And the true consequences may only become visible in the years ahead.